Hey, Tom here, FlipAnythingUSA. On my blog, I share how I made my fortune in real estate. One deal at a time, did it with real estate. This is my book. Oh, playing around here. Oh, brother. Let's see if I can move this. One deal at a time. There we go. Anyways, you can tell I'm rusty. I haven't been in the office here for a few days. Interesting enough, I just, I did a video the other day. Put that book up here somewhere out of the way. Here we go. Here's my book. So here's my book, Wake Up and Smell the Real Estate. On my blog, I share how I made my fortune in real estate. Starting at 19 years old, that was almost 40 years ago. And I've been doing the same thing ever since. I was a millionaire by the time I was 28, and I've been an investor ever since, and that's pretty much all I've really mostly done my whole life. So I wrote this book. It's been a #1 seller on Kindle and Amazon. You can get it for $10 on Kindle. You can get it $20 in paperback. It'll be the best money you spent. And look, if you're going to get ripped off, and there's a lot of snake oil, and there's a lot of rip-offs. There's a lot of people that haven't done half the crap that they say they've done. I've done everything I say, and it's in my book. I show you exactly how I've made my money. I've been doing it a long time. But if you're going to get ripped off for $10 or $20 from me before you go get ripped off for tens of thousands or more from somebody else. It's a way to just get your feet wet. So we're going to start talking about Grant Cardone. There's some interesting stuff that's come up. Somebody's made me aware of. Please like and subscribe right now. You're going to love it if you haven't seen me before. But I just talk about real stuff. I'm not the smoothest operator, but please sign up, and we'll be right back. All right. So the reason this is interesting to me is last week I made this video. Hey, Lee, I'm glad you're here. Got your message. Anne-Marie, I'm glad you're here. You'll be interested in this. Anne-Marie was a former Grant Cardone student, actually. She's been to a seminar, and she's got some things. Hey, Delta, glad you're here, Delia. And is that Raphael? I don't know. So I've been in Colorado Springs with my boys. One of my sons, actually. We went and did some biking and stuff and got away for a few days. It was actually quite nice. A little bit hot there, hotter than it normally is. So I didn't escape the heat I'd hoped to escape, but it wasn't too bad. So it was interesting. I made this video last week. It was probably the last video I made, I think. And so check this out. I'm going to play this just so you guys can, everybody can hear me okay? Let's see, what'd you write, Liam? Hey, Tom, it's true that you can't assign an REO purchase and sale agreements. REO purchase, yeah. I'm not sure, is that a question? Oh, hey, Aman, thanks for watching, I appreciate it. Hey, Liam, let me get back to that in a minute. I'm not sure exactly what you're talking about. A bank-owned purchase agreement, you can't, I'm sure you could assign it. I think I've actually done it. I think I did it on actually about a 21-unit apartment complex for a friend of mine. Hey, Anne-Marie. So if you just got here, hey, hit the subscribe. Here's my fancy subscribe button. I just got built in. Subscribe, okay? Look, I'm not the smoothest guy, but I certainly will never steer you wrong, and I'm not interested in taking your money. For a book, yes, and believe me, the book is peanuts. I also have a class. Some of the people actually watching right here have taken my mentorship. Liam has actually hit a home run right out of his first month of mentoring. He hit a home run. Really, really cool. And but everybody's going to do well. Everybody's going to do well. You'll never get ripped off. You take my mentorship or read my book, you're not going to get ripped off. You're not going to be so vulnerable. But what was interesting and what I wanted to share with you guys, and this won't be a real long show, and I'm going to try to do a Zoom meeting. We'll get everybody in from the last two classes together. I kind of miss everybody. I haven't had that Zoom offering for a while, but I've been trying to get with my boys before they get busy with school and stuff. So let's watch this. Tell me if everybody can hear me. I assume you're going to be able to hear the video fine too. Double check this here. Make sure the volume's up on that. All right, so check this out, because what caught me off guard when I did this video on Grant, The Truth About Quitting, I thought it was refreshing that at the end He wasn't saying, trust me with your money at Cardone Capital, I'll never steer you wrong. He usually says something to that effect, and then he asks you for your money. And tells you to sell your home and all this other stuff. And, it's not safe in the bank, but it's, safe with him, basically. But so listen to this. Just watch this real quick. You can do better. And like I say, don't be the sucker in the room, right? You don't be the sucker in the room. A lot of times people don't realize, if you don't know who the sucker is, it's you, okay? Not every idea is good. I've had a lot of bad ideas, and I test the waters, go, oh, yeah, that's not going to work. So it's kind of nice to see him actually not ask for money, not ask for people to invest in his deal. But maybe that's coming when you call. I don't know. But that's bait and switch, and I'm not saying he's doing that, like I said. So where I was going with that is what struck me by that video that I just watched and that I critiqued last week was that he didn't ask for anybody's money, right? Didn't ask for the money. I thought, well, that's interesting. And he actually started alluding to, maybe I'd like to be your mentor. And it was like he was kind of testing the water. So let me look over here real quick. Oh, God, that was Kevin. Let's see. And so now listen to this. It's how he's kind of changed his tune. These videos have been different. Listen.
Capable of really achieving your life down. The 10X Challenge, grantcardone.com/challenge. We'll see you there. 10 days to change your life forever. Yep, 10 days to change your life forever. That's my goal. Join me.
Okay. So again, and then let's see what, and then this is the one actually. Listen to what's next.
It might be pretty and people might like it, but it doesn't move. It doesn't change. It doesn't grow. Let me know if I can mentor you, okay? I'm looking to start in a mentor group where one of the things we do there is see you through to the end with you, me and my team.
That didn't sound good.
A bunch of killers around me that work with me, that implement our strategies, and we're all like a military operation. Say, don't quit, not yet. Whether it's working out, taking care of yourself, getting in the best shape of your life, building a company, starting another company, fixing your marriage, going through a lawsuit. I've done all this stuff, man.
Well, that's funny he says that because he's actually in one, it sounds like, and I'll tell you why I think that. So I had taken notice right off the bat. I thought it was nice that he wasn't asking for people's money. I'm not a big Grant Cardone fan. I don't like the model investment. I always say invest your own money, like me. You take responsibility for your own money and you control it. You have access to it. If it goes up, it's yours. If you lose it, it's your loss. You don't get to blame anybody, but you got to take all the credit and you got to take all the profit. And that's the best part. Hey, Rish, you're glad you're here. So check this out. So what happened is after I'd made that note, somebody wrote me and said, hey, Tom, I don't know if you know this. And, before I get to that, check this out. Okay, so this goes back to how he normally closes. And this is probably one of his worst closings, but have a listen.
You got cash in the bank and think that the cash in the bank is your security, you're freaking hallucinating. It is not security. You need cash flow. Cash flow is security. Invest with me at CardoneCapital.com. I'll never let you down. If you're not going to invest with me at CardoneCapital.com, figure out how to do these deals by yourself. Your family will thank you for generations to come. God bless you. Peace, love. Big heads up to all my friends.
Okay, so, so that's was his mode, right? Invest with me at Cardone Capital. It was always closing with, look, send me your money. The Zoom call is for members, yeah. But once in a while I'll do one that's open to the public. I'm sure I'll do one here pretty soon too. So I'm kind of excited. My audiobook's out, by the way, folks. My audiobook. You can now get Wake Up and Smell the Real Estate, and it's me reading it to you. It's not that that's a good thing, but that's how it is. So that's available on Audible now, and I think on iTunes is what I'm told. So if you haven't subscribed, please subscribe. And we talk about real estate. We talk about real deals. And, I've been doing all kinds of stuff. I show people how I maintain the, 100,000+ square feet of properties that I do own and maintain myself. And then I keep a certain amount of my property, maybe 20-30%. I rotate. I flip. That's what I do. I flip and I just make a profit on that stuff. And I keep the cash flow stuff that I have, that's cash flow stuff. So, but what I wanted to talk about a little bit on this is I got somebody said, hey, Tom, Grant's getting sued again. Now, I'm not going to say he is, but I did pull this up, and I was sent this link. So take a look at this link here. And he sent me the link that went to this one right here, okay? And this says, securities class action filed on behalf of persons or entities who acquired interest in Cardone Equity Fund 5 LLC and Cardone Equity Fund 6 LLC. And it looks like the law firm are the lawyers Susan Godfrey, yeah, I think. No, Krista Cobbin Packman, Esquire, Sussman Godfrey. Okay, so anyways, and it talks about, it asserts claims for violations of Section 12A and 2 and 15. And I think this kind of defines it. I'll just read it. The complaint alleges that defendants made materially false and misleading statements and omissions of material fact regarding, among other things, investors' expected rates of return on their investments. In this action, plaintiff seeks, among other things, an award of rescission and recessory damages in prejudgment interest. Okay, so if I understand that correctly, they want their money back. Okay, they want their money back, and they want that. It would appear to me they want that from the salesman. Okay, so in other words, this could easily be criminal. And I've never liked Grant Cardone's investment model anyways, and it's very dangerous when you play with unaccredited investors because they can't afford to lose money. And so, of course, unless some lawyers put it together and sue you all together. So this is pretty scary stuff for Grant. I would not want to be in his shoes, and I hope he can change it, because like that we just saw him say, this is the safest asset class in the world, and on and on he talks about how great it is, and and if your money's in the bank, you're crazy, and cash is shit, and everything else he says. Well, if your cash is in this, it looks like it's really tied up now. It's really balled up. And but here's the other thing that struck me is, take a look at this. This was September 21st, right? Sussman Godfrey. That's that. Now look at the next day, or here's the next day. Well, I think it was actually the next day, on the 22nd. Here's 23rd. It's the same thing, and it appears that, investors, let's just take a look. Yeah. So look, check this out. Okay, so this is a lawsuit. Again, this looks like another lawsuit, and I don't pretend to know everything about lawsuits, but what I'm seeing here is another law firm representing another group of individuals, investors, that are shareholders, let's say. They're actually soliciting people to join, I guess. Boy, great. Now I'm part of that. I'm not trying to help that, Grant. Don't think I'm trying to help anybody bring it to you, but this is news. And it was, so I'm learning, I'm doing this. Listen, I just got off a plane. I'm just kind of going through it with everybody else here at the same time. You know how I am. I'm very lazy. I don't like to do much research. I just we watch it together. But again, what I caught here is it's the same LLCs that are affected by this thing, but it's a different law firm. So that means another law firm that presumably is representing a group of people, and then again go back here, and then there's not just two of them, there's three of them. Here's another one, right? Different law firm. That other one was Braunstein or something. This one's the Rosen law firm. So again, that's that's three people knocking on his door wanting their money back, or I should say three lawsuits representing groups of individuals. I've always said, Grant's got, he says sometimes that he has 3,200 investors. And I always say, where's the testimonials? All these people that are making so much money, or that this is the greatest asset, class in the world, according to him. Where are these people? Where are these people? Because I haven't heard anybody really say anything good about it. In fact, Anne Marie in here is one of the people that has told me some things that I really, concern me, particularly about embarrassing the young man on the stage, I think it was. Sorry, I'm a little bit parched. So, anyways, not good stuff. I wouldn't want to, I tell you what, I wouldn't want to be an investor, have my money tied up in this crap, and I also would not want to be Grant Cardone. And that's why I tell you, just listen, you don't need a partner. Invest your own money. You know what? You don't need a partner. You're only going to get a pro rata amount of whatever he makes. And so, whether you buy a $100,000 property all by yourself or a $10,000 property all by yourself, why pitch in on a $10 million property with Grant or Chris Crone? Somebody just mentioned Chris Crone here. Chris Crone, I don't know if Chris Crone needs this lawsuit. In all honesty, I don't like Chris Crone's model either of investment either. I really don't. I think it's silly for anybody to invest with him. Just like Grant. But I think Chris actually could catch a break right now. In fact, if I was an investor with Chris, I'd be wanting Chris to sell that stuff right now because the interest rate is low, 2.8 on average on houses right now. So Chris has an opportunity to unload those houses. A little bit of a housing shortage in some areas right now. So Chris has an opportunity to unload those assets, and he'd probably get a premium for them right now compared to what I think could happen in the future. But that's just me talking. Doesn't mean a thing. I only have my own properties to worry about. I don't have any investors breathing down my neck. And, so... Let's see. Yeah, Anne-Marie says, I never trusted anything he said. It was just too good to be true. Well, you know what? Like I said, I'm just going by what's on the web. And, I was struck by the fact that Grant was not, move my book somewhere. Buy that book. You can get it on Audible now. Here, let me shrink this thing a little bit. There we go. If you get my book on Audible now, and if you just please subscribe. If you haven't been here, listen. Just a group of investors, people that have taken my course and read my book, or like-minded investors like myself. This is what we do, and but right now we're examining Grant and looking at his stuff, and it's not looking. It's nobody's surprised, I guess. But let's see what else. Anybody got any questions? Anything going on? Francesca, that's a nice name. So sad he did that to the investors, took advantage. I don't know. Listen, it's a lawsuit. Doesn't mean he's guilty. You got to get through it first. I'm a big. I never condemn anybody before they're proven guilty. I just can't do it. And like I said, I don't like the way he invests. I don't like the investment model. But people have told me he's a crook, and I say, I don't think he's doing anything illegal, and I still don't have any reason to believe it. That's the problem when you invest other people's money. People come knocking on your door and they want their money back. And you guys might, I'll play this. You guys might remember this. I have this clip actually stored. Let's watch this real quick.
And you got a good attitude and you ain't a little bitch. You ain't a little baby. You ain't cry baby. You ain't stupid baby. You ain't dumb. I need my money. I got to buy a Rolex.
Yeah, that was, to me, that was my first impression of Grant, and that was like the worst. I just thought, oh my God, what's wrong with his head? But I think he was under terrible pressure because I think people were saying, hey, I want my money. I need to buy a Rolex, or I need to pay something off, or pay my car off, or I need my money back. So he was feeling that pressure early on as soon as we had the big pandemic thing. So, I just don't envy anybody that's in that situation that he's gotten himself into. And you know what, really, Grant, you should get my book and take my advice and just invest your own money. You'll be a lot happier. And if you're good at it, you'll make money. And if you're not, then you're not. Anyhow, let's take a look at something else here too. So let me go back over here. Where'd we leave off? God, Cardone challenge. I don't think that was it. Yeah, let's see how he ended this one. Let's just watch a little of this. I think he's going to the mentoring thing.
Real estate business, like whatever you want to do. You want to see a book through it.
Yeah.
You want to get the book sold. You want to make the New York Times bestseller list.
See, so now he wants to be your mentor. And look, in all honesty, that's probably what he'd be best at. I'm not endorsing him, but I mean, again, you can find a lot of self-help books for, you can watch videos for free, or you can get a book that for $10 or $20. Mine's on real estate, but I mean, really, Jim Rohn. Listen, Jim Rohn. If you don't have Jim Rohn, get Jim Rohn. That guy's one of the most fantastic motivators there is. He's been dead a while, but he was a fantastic motivational speaker. Let's see. I don't know why. Let's look at this. I'm not sure why I pulled this up. Let's take a peek at this real quick. Yeah, Than Merrill. I don't know. I think Than Merrill loans his name to some people that are not a little bit slippery. I've never heard anything good about the Than Merrill seminars. In fact, I've only heard nothing but bad stuff. So that's that, snake oil stuff that just doesn't serve anybody very well. But again, anyways, but you just listen when you go into one of these seminars, a free seminar, just so you know, think about it. If you went to a diamond seminar, or if you go to a wine tasting, free wine tasting, and I fall into that category. I'm a snob. I like real high end wine. Well, I'll go into a wine tasting for high end wine, and guess what? They're inviting me in because I like expensive wine. And I mean, there's $100 door fee to go in, but you get to taste wine from all over the place. And that's a good deal. But even then, they're still not making any money being there for $100 a head. They're not making any money. I can drink $100 worth of wine quickly. In one of those places, it doesn't take much. That's half a bottle. But my point is, I am the money. You're invited in the door because you are the money. I know I'm the money when I go in there and I buck up with a couple cases of wine or order the next crop of wine that's coming if I really like what I taste. Well, they're inviting you in because you are the target. You are the mark. You are the one that has the money. So that they say come in for the free seminar, but they know that you're going in there to learn about buying real estate, which already infers that you have thousands of dollars to invest in real estate, right? They know you have thousands of dollars or credit. They want to get at your credit card. They know you have money. If you're interested in real estate, it means, they must have a little money in their back pocket. Well, you are the money. You're invited there for free, but you're not expected to leave for free. They're going to get your money. You are the target, bottom line. Okay, let's go in here. Let's talk about some money. Let's talk about some deals. So like I told you guys, I pulled on the deals that I have. I'm going to take my lumps on the 1031s that I had going, and I'm just sitting on the cash. And to be honest, it feels really good. I'm going to be sitting on a lot more cash too. I've actually have some other big offers on some of my bigger properties coming. I haven't decided to sell them or not, to be honest, because I really can't find anything that I want to buy right now. I haven't found anything that gives me enough of a return that gets me excited. But I'm kind of holding still. And I tell you guys, they've been through the course. Don't feel like you need to rush. Don't jump, right? I mean, I think the economy is pretty good. You got these things that, these stupid riots where they're destroying the real estate in different areas. I mean, that property is going to be expensive to insure that property when they do rebuild it. No insurance company is going to want to even insure the damn building. And so it's going to be more expensive to insure. You got those kinds of issues. People are getting out of the city, I see. And I don't think they're crazy about living in apartments. So that is a plus for getting people into the suburbs. And there's a little bit of a housing shortage, a little bit, because people are getting out. People that still have good credit and are working. And they're taking advantage of these low interest. Let's see. Risha just wrote. The BBC just did a doc on a guru named Samuel Leeds, who scammed a veteran for all his life savings in a free seminar, and the guy committed suicide. Jeez. Yeah, no, it's terrible. Listen, the Great Depression, right? People lost their money. They were jumping out of the windows of skyscrapers and stuff. I mean, you take away all the money that somebody's earned their whole life. You kind of taking away their joy, what's going to be the rest of their life. And, everybody's responsible for their own money. Don't get me wrong. Everybody's got to take responsibility for their own money. But still, it's unfortunate. I say it all the time. The masses are the asses, right? The masses are the asses. Most people are a little bit lazy. And they don't want to do the work. And you know what? If you recognize yourself as being that person, being a little bit lazy, and you don't want to do the work, then don't invest, because you're going to be parted from your money, and it's not going to be pretty, because that's what people thrive on, is people that are looking for an easy dollar. You know what? You are the mark. You are the perfect person to take money from if you think that you're just going to give somebody your money and they're going to go double it for you. It just doesn't work that way. You might get lucky here and there. Somebody might get lucky, but it probably won't be you. But if you take time to educate yourself and do the right things, then of course you can narrow your odds. Let's see here. Yeah, it's terrible. Samuel Leeds, huh? We'll have to look up that guy. How do you diversify? I think you mean diversify your income personally. Listen, I'm a real estate guy. I just buy real estate. I don't diversify much. I might diversify in kind. I might have some commercial, some industrial. Some residential. I flip. I have some for rotating and flipping, and then I have stuff that I hold tight that just brings in cash flow, right? That gives me a decent return on what I have. And most of my stuff's mostly all paid for, or I owe very little. I have very little debt. My debt to worth ratio is very, very low. The debt is very, very low compared to my worth. And so I can take a pretty harsh beating. I can take a big vacancy and to my, it works for me because like my tenants start to hurt. Guess what? Sometimes I absorb some of it with them. I help them get by. If I think they're worth it, if I think that they're good for it, I help them get by. And, but that's the options that you have, right? And I do hold my management very tight, right? I hold my management tight because I like to know my tenants. I like to know them. I want them to know me. And, we may not always agree on everything, but they know I'm fair. And they know that I will do my job, which means take care of the property because that's my job. And they are my customer. So let's see. Tom, have you done any bank-owned commercial properties? Yes. I found one, and I'm wondering how to negotiate. It's no different with them. Tell them you're going to pay them. Convince them that you're going to pay them, however you agree, and then do it. Just be serious. Let them know that you want it and that you're going to close it. You have to demonstrate that you want it, number one, because they got to know that you want it, right? That way you get all the attention and they ignore everybody else. That's super important. Then the next thing is you got to fortify that you got the money to pay for it. And if you can show them that you want it and that you're going to close, that's most of it for everybody that's going to sell a property, that they want to know that you really want it and that you're really going to close, because people are disappointed when people don't close. It's just how it works. And but you can make a lot of money. I've let a few deals go that I wish I wouldn't have. And one, I always tell you guys, there's one that got away that's so painful. I still can't make myself talk about it. But just because it's a personal pride thing. It should have never have happened. But that can happen when you get really over leveraged. Sometimes you got to pick and let go of something, even though everything's good that you got to let some stuff go. But you know what? I'm at a point in my life right now. I got plenty. And that's why I'm kind of looking forward to just sitting on cash right now. And, my kids are starting to roll out of college, and I got some that are about to get out of high school. And, I can just play. I don't know. I may go buy a place in Colorado Springs, go see John Ratowski. I was hoping to see you, John. I just didn't get a chance. I wanted to have my father-son time. That time's running out, as you become an empty nester. You can't go back, right? You can't go back. So you got to make the most of what you can with the kids now. Hey, Robert, how you doing? What else? Who else we got here? I'm not even sure how long we've been on. It always goes by so quickly. But anyways, but regarding Grant, I would just tell you, just get out of settle this stuff up and get out of it. Stop investing other people's money. It's not worth it. It sounds like you got enough. It sounds like you got enough. Sell your motivation, sell your books, sell your courses. I know you've been grounded. You can't fly your jet. You can't pack arenas, but I would just stick with that and just put the money away, hang on to what you got. But, this stuff you don't need it. And honestly, I don't think you're very good at it. So I would just let it go. It'd be better for the people. Hey, if somebody's got a question, you guys can make a phone call. If anybody wants to talk, let me know. I'll throw a number up there. But I am going to have to cut it pretty close pretty soon here. It's getting late. It's getting near dinner time for me. And I got to buy a bottle of wine before tomorrow, because they won't be selling wine tomorrow. They're dry here on Sundays. But, all right, well, okay, so let's see, Combat Fanatic. Oh, yeah, what kind of combat you into? Okay, he says, if I'm buying my first property, which will be apartments, do you think Nevada is a better place to start instead of California? I think you need to get my book, because you wouldn't ask that question, number one. listen, there is no bad real estate. There's just bad deals. Don't make a bad deal, okay? I've bought in several states, and I make money in all of them. Every state I buy in, I make money. It's the same. It doesn't matter. It's the same in every city. It's the same in every city, every state. It's the same in every city, every state in every state in the USA. It's the same over in Israel. It's the same over in Europe. It's what? If you can buy a piece of property, buy it right. Buy it under market. That's what you do. That's what my book will show you how to do. And if you take my mentorship, there's even more you'll learn. But again, you don't need it. You can just watch my videos. But if you watch enough of it, you'll know what to do. So it doesn't matter. Don't get married to the idea that you got to have apartments, okay? Listen, apartments aren't treating people so well. Ask Grant about apartments. You might have some for sale soon. But I've owned apartments and I've made money. But the bottom line is I bought them for less than they were worth. That's the deal. You buy things for less than it's worth. Every month I'm looking for commercial industrial offices, right? And what usually happens, I end up paying cash for a couple of houses and flip those and make money on the houses because it's easier to find, for me right now anyway, it's not always that way, but it's easier for me to find great deals on houses and that take just a few $100,000. I'll just pay cash for them, flip them, make 50 to 100 grand. It's quick money. Now, what I'm really looking for is stuff that costs millions that I can flip and make $500,000 on or keep it and just make a nice cash flow on it. But I'm not finding that stuff. But if I just narrowed myself, if I just said, this is all I want, I'd be ignoring everything else around me and I'd be missing profits. So what happens is I make money on other stuff until I find what I really want. It's like if you're digging for gold, right? You're digging for gold and all of a sudden you find some silver. You're not going to throw it away, right? You're going to grab it. And that's what you do. So I'm digging for gold, but I'm settling for silver here and there. Okay, Zero Edgy. Okay, this is a good question. Oh, Delta. Let me get to Delta here. Should I leverage when I start investing? Okay, well, look. Delta, listen, you kind of have to leverage in the beginning, and I still leverage, but I buy under market. That's my hedge, right? I buy under market, so it's worth more than I'm paying for it, number one. Number two, whatever I'm making on the cash portion of what I put down, I'm making at least half again that much on the borrowed money. And so what ends up happening is if I borrow 3 times more money than I put down, then I'm actually making 1.5 times more on the borrowed money as I am on my own money. And so if I make 50 on the money I put down, say 50,000, that means I'm going to make 75,000 on whatever the borrowed portion of the money is. So I start making $125,000 a year, with only 25% of my cash put down, the other is borrowed. That's a nice deal. Let's see. What else we hear? So Delta, yeah. So that's investing is. I leverage, but again, be careful. Be careful. You got to buy it right. Get my book. If you don't have my book, don't do anything I tell you to do here unless you have my book, because my book is what really is kind of your roadmap. This is the most basic foundations for doing a decent deal. You won't get screwed or lose money if you just follow the guidelines in my book. And then there's other ways to make money for certain. There's other ways to make money, but this is a really good foundation from which to start. And it's how I made most of my money in the easiest way that I made it in the safest way, to be honest. Okay, let's see, Risha, do you not mind about different state taxes since you'll 1031 either way? Do you not mind about it? I don't care. No, it doesn't matter. Listen, if I don't want to, if I want to defer taxes, it doesn't matter what state I'm in. If I have a big profit, I want to buy something. I just want to buy something else and use that money and defer it into the next investment, because that way I buy more and bigger. And then of course, if I'm buying it right, then I'm making money on some of that deferred money, that deferred tax debt. That's ultimately it's going to come due, and you're going to pay it. But again, sometimes I'll be deferring a chunk of money, and it's like it's nearly all profit now. In other words, I'll have to pay 25% or more of all that money that I'm taking in. Well, I want to defer as much of that as I can, so I can use that money and keep it rolling, right? But it doesn't always happen. I'm taking my lumps on 2 properties I sold. I planned on doing 1031s. I'm taking my lumps on it, paying my taxes, and that's fine. That cash that's left over, it's just going to sit in the bank, and I'm going to use it how I want to and make up for the stuff that I lost on taxes. Okay, so Luca, when are you going to live? Wait a minute. Oh, when are you going to do live from the Manny Koshman new market video? I don't know that video. When are you going to do live from the Manny Koshman's new market video? I don't know it. I'll look into it, Luca. Send me a link. We'll take a look at it. Rish, can you explain what went wrong with Dave Ramsey investing in a later video? I don't know much about Dave Ramsey. Listen, obviously I don't follow a lot of people until I look at them, and I want to look at them when I'm looking at them with you guys. And but yeah, Dave Ramsey, the name's familiar. And I know Chris, who's on here with me sometimes, I know he likes Dave Ramsey. I think Dave Ramsey just kind of throws out a lot of common sense stuff. Don't spend all your money, save. I mean, it's basic common stuff, common sense, right? And it is good information. Prayers going out for all in chat. Stay strong. Thanks, Dan. Cool. All right. Can somebody tell me how long we've been on? I'm not sure. But I think I better wrap it up. Time flies. But hey, I'm back. I'll see you guys. You know what? I'll get a video out here probably Tuesday. I should did some. You guys like the landlord videos? Do you like me showing you taking care of the properties? How I do? Not so much the management. Well, there's some management, but once in a while you see me take care of some of the properties like I do. A lot of people like the landlord series, but I'm going to get back onto the lesson stuff. By the way, we got some new stuff. Oh, Sorrow Zero Edgy. Let's get back to this. Oh, thanks, appreciate that, Luca. Okay, we got some time then. Real quick here. What's your question, Edgy? Would you mind rotating back to my question? You might have to just throw it out there again. I'm scrolling back here. Oh, okay. How do I diversify? I thought I answered your question. So, how do you wrote diversity. How do you diversity your income? Okay, so how do I diversify? I kind of told you. I diversify in as much as I buy different types of property. Residential, commercial, industrial. That's diversification. In other words, it's all real estate. That's pretty much all I invest in is real estate. I don't buy stocks. I don't do that stuff. I've got no interest in it. My stock is on my shelves is what I tell people. But so probably for me, cash, and that's usually because I'm just waiting for a great deal. So, but I buy a certain amount of property that I maintain for rental, for cash flow, right? I live on that stuff. And then I have a certain amount of cash I use to buy and flip, to keep flipping and rolling. So I make money on flipping property, and I make money on cash flow from renting property. So that's about as diverse as I get. I'm really pretty narrow. I'm just pretty much real estate only. That's all I've done my whole working life. That's all I've really done. Oh, the inheritance question. Jeez, okay, sorry. We better ask it again. If you have inheritance, I'll tell you right now, hold on tight, because that's the easiest money to be separated from. I see it happen all the time. I've done it. I bought property from people that they sold their property way too cheap. They didn't do their due diligence. There's nothing worse. I mean, I can't imagine, dying, working my whole life, have a bunch of property. I leave it to my kids, and then my kids hand it out for peanuts. No thanks. That happens though. So yeah, if you got inherited wealth, just hang on to your wealth, because unless you are already rich, are already wealthy, and already proven that you know what you're doing, don't do anything. Okay, so many people get several $100,000. They buy some sort of crappy stock, and then they lose their butt. And guess what? Easy come, easy go. That's really the really good word. Easy come, or that statement. Easy come, easy go. If you didn't earn it, you'll probably lose it quickly. That's just how it works. So, look, I got to go. Thanks for watching, everybody. Please hit the notifications, and you'll know when I do this stuff. And I got some other videos planned. I'm going to keep doing the show you guys how I maintain the things that I have, and we're going to start talking about more deals. I'm actually let's see, T-Moon, what's he got? Inherited in May 20th. Best advice was wait 6 months before doing anything. Yeah. Yep. That is good advice. Wait. Count to, whatever, 10,000. Yeah. Oh, if you're underage, well, I don't know what you mean. If you're under 18, I guess you're saying, yeah, put your money in the bank. That's not a bad place to put it. And just don't loan it out. Don't give it to anybody. Thanks, Anne-Marie. I appreciate that. And Tom, I did send the link. And yeah, we'll take a look at Sam Leeds. Let's do that. We'll take a look at Samuel Leeds. We got a lot of UK folks that have actually taken the course and follow and have the book. They're the second biggest buyer of my book, by the way, is folks in the United Kingdom. Then behind them is Canada. Hey, man, thanks everybody. We'll get together soon. I appreciate you sharing your time with me and watching, and we'll keep it going. So take care.